తెలుగు క్రిప్టో యూనివర్స్కు స్వాగతం. మీరు మా ఛానల్ని మొదటిసారి చూస్తున్నట్లయితే సబ్స్క్రైబ్ చేయడం మాత్రం మర్చిపోవద్దు. మా న్యూ వీడియోస్ నుంచి నోటిఫికేషన్స్ కావాలంటే బెల్ ఐకాన్ ప్రెస్ చేయండి. ఇంకా చాలామంది మన సబ్స్క్రైబ్ చేసుకోకుండానే చూస్తున్నారు. ప్లీజ్ సబ్స్క్రైబ్ చేయండి, మాకు చాలా మోటివేషన్గా ఉంటుంది.
I want to spend a little time on crypto. It has been an incredible month, and fears of systemic collapse have been rife in the marketplace. So we've seen Bitcoin. It peaked way back in November at 69,000, and it is now at 19,500. It is still higher than its pre-COVID 7,000 to 10,000 range. And it is just about at its 2017 high. So this could be some support. It's also at, it is below its 200-week moving average, which is at 22,500. So there is some concern that that is the new resistance. Now, as we've seen the last month play out, talk about a reach for yield. Crypto personified that. DeFi personified that. And we knew that the Luna Terra experiment with algorithmic stablecoins was not going to work. It was backed by nothing. And I remember we did a podcast with Do Kwon. It's still on our site. And I remember listening to it twice because I couldn't understand what he was doing or saying. I am an economist by background. I really do try and noodle through these things. And I just didn't think that was going to work. And it failed in spectacular fashion in May and has taken Celsius down with it, Voyager Digital, 3 Arrows Capital, BlockFi almost. It was very interesting to see BlockFi's last funding round at $3 billion. This is a lending platform. And tried to do another round recently at $1 billion. He couldn't get it done. And today it seems that FTX is going to buy it out, or it has the option to buy the equity for $240 million. A rumor this week had it at $25 million, so much better than that, but much worse, less than a tenth of its last round. And it's not just happening in crypto. Klarna just announced, I believe, that its last round was in the $45 billion range. This is a fintech company, and it is doing around now at $6.5 billion. So big down rounds happening very quickly. Or we will put out today our Bitcoin Monthly. We started it last month, and the title is Contagion versus Capitulation. And as you know, if you saw our last report, we have a lot of on-chain analytics which give us a sense of the capitulation in the marketplace, and also a sense of what is going bad out there. The transparency in the market, I think, is the reason we've seen a lot of failures very quickly. Compared to the opacity in the traditional financial markets, I think the shakeout in crypto has happened sooner and faster than it would have in the traditional financial markets. It's interesting that BlockFi is going to FTX. We know that two other platforms or companies, Lendn, which is LedN, which is a lending platform in Canada, highly regarded, also seem to be interested, as did, I believe, Morgan Creek. Now, these are people who really know what's going on in DeFi, and if they're willing to step in here, that has increased my confidence to some extent that the systemic risk is diminishing here. With time, we're seeing that each meltdown seems to be a smaller one, not the opposite. So that is giving us some confidence. The only reason I think people are a bit on edge here is technicians who, those who really don't follow the crypto markets at all. They're just technicians. They follow equities, bonds. They don't care what these companies do or what kind of fixed income instrument it is. They just have their technicals, and just off the cuff, they will say, well, if it breaks from here, it could go to 11 to 13,000 from this 19.5. And the reason they say that, I can see this on the charts, is that's where there is a huge amount of support, where it peaked a lot of times in a trading range. That said, I will say that I am feeling a lot better about what's going on in the crypto world right now. You'll see our Bitcoin monthly. I would say, we're neutral to positive. We're waiting for a few more capitulation signals. And of course, time will tell on the systemic side here. We haven't heard of another stress signal in the last few days, so that's good as well. So what I will leave with is what's happened in the crypto market gives you a sense of why it's going to work long run. It's transparent. And there's a lot more trust in the crypto ecosystem because of the transparency and the over-collateralization than I think there is in the traditional financial markets. And when we wonder, why are the CDSs going up on these banks? We wonder about the reach for yield and how leveraged some of these situations are. And we don't know where they're hiding. And so maybe that's all this is like, okay, the crypto market has alerted us that this reach for yield it went way too far. And there are too many excesses, too much leverage around it. Hedge funds leveraging 10 to 1 when yields are 2% so that they can reach the returns or their return objectives. The good news is that we are beginning to get data that is confirming that the economy, the U.S. economy, is in recession. And if you've tuned in before, you know that we believe that Europe and China effectively have been in recession as well. So now a global recession. We're also getting a lot of indicators that prices are coming down. And I think this notion that the inflation that everyone has been worried about is quite a wrong way of looking at the world right now. We believe that deflation is the much bigger risk. We've been saying this for a time. We've been ridiculed for saying it. And we were challenged by those who were sure that we were back into a 70s style inflation scenario. We think the pricing action, and I'm not just talking about stocks and bonds, I'm talking about commodity prices, crypto prices, and perhaps soon even housing prices, that many people will conclude the greater risk is deflation. The S&P down 20% year to date, NASDAQ down roughly 30%. So the stock market has not seen a worse year to date since 1962. And that was when the Cuban Missile Crisis took place. And then what happened after that is we ended up in the Great Society, guns and butter, and inflation took off. But first, the stock market was a barn burner. It was very hot from 62 to 66. When it comes to bonds, this has been the worst year-to-date performance in bonds in anyone's lifetime. And by some measures, you have to piecemeal the bonds, but to try and get the record, the worst since 1788. That's more than 250 years ago. So it's been a very, very rough market for investors. We think there is light at the end of the tunnel. The light is that the Fed is getting a lot of signals that will ultimately end up in the lagging indicators called the PPI and the CPI. They're getting a lot of indicators, and I think a lot of companies are going to be telegraphing in their earnings reports this next month that we are in recession. And I do believe the Fed will do a double take.
ప్లీజ్ లైక్ షేర్ అండ్ సబ్స్క్రైబ్ తెలుగు క్రిప్టో యూనివర్స్.